Dividend investors, bonjour. This is Mike Yehu, founder of Dividend Stocks and passionate investor. I took 2 days off at the beginning of the week because last week I did so many webinars that my voice broke on Friday and I couldn't speak anymore. So everything is going well with the family. I hope that it's the same thing for you guys. Stay home, stay safe. We're gonna beat that virus. In the meantime, let's welcome you to another Dividend Uncut report. Today we're talking about if you should rebalance your portfolio or not during those times of crisis. A lot of people are saying, well, you know, when market crashes like this, don't touch anything, everything is good, don't sell, and just keep going, right? Stick to the plan. This is a very good advice, and usually I totally agree with it. Right now, we are living something that is somewhat a bit different than usual. Not because it's a huge bear market or that you lost more money than usual, but because the virus is affecting the economy in a way that we never saw that before. We never saw 30-40% of our economy being on lockdown for now we talked about a few weeks. Now it's probably going to be a few months with progressive return to normal. We already saw the impact on unemployment. I think that job claims are going to go through the roof for a while. That's quite obvious. And now is the time to look at your portfolio and wonder if your holdings can weather this storm or not. So this is why I think it is a perfect timing to rebalance your portfolio and look at what's happening, but don't go overboard with it. You know, at the time that we are right now, market is probably going to open in red again today. We kind of feel that there's a fatigue in the market. A lot of people are kind of like just done with all the bad news. And we see that the volatility is a little bit less, but expect to still go to more down days going forward. We're not done yet, and as long as we don't have information telling us that the virus is under control and that the economy is under control, expect more volatility. Right now, there are pretty much two scenarios that could happen on the stock market in the upcoming months. Scenario number one, we get the virus under control in the next 2 months in North America, things are getting better, and then we can see progressive economy going back up in somewhere like between June or July. That could be called the optimistic scenario. In this case, we won't feel a big hurt on the economy over the long term. It will hurt, but it will not be that bad. Scenario number two, we wake up in May and then we have hundreds of thousands of cases in the US, thousands of deaths every day, and the virus is still not under control. If this is the case and we have to lock down the economy for several months, it's going to leave scars and it's going to be very difficult for many businesses to go through this incredible depression, because at that point it will be depression, that's for sure. Knowing that, it is time to look at your portfolio now, because you have lost some, but it's not too late to make some modification. The first thing you have to do is check out your sectors. If you want to have something safer, you want to go to the classic consumer staples, so food, basic needs, obvious, and then healthcare, communication services, utilities, and believe it or not, tech stocks. Most of the tech stocks are sitting on a bunch of cash. So those will be able to go through a recession. When you look at utilities, yes, their growth perspective will diminish. Their dividend growth will be smaller than expected because their projects will be less profitable as well. But still, they will do okay throughout the crisis. And third, for healthcare, well, it's kind of obvious. We still need healthcare. We're talking about pharmas, but we're also talking about medical devices and apparels. Not apparels, but devices and like all the equipments that our health system has to purchase. Those things will continue to be very important whether or not we're in a recession. And communication services, well, you know what, as we are in lockdown, the only thing that we can do is stream, watch TV, talk to people with our phone. So I don't think that this business will go down anytime soon. Then you can take chances on sectors like financial, consumer cyclicals, and industrials, but those will require a little more research. Second point, Now that you have looked at your sectors and then you figure out which one that you want to get a little bit bigger or which one you want to get rid of, energy, now it's time to look at each of your holdings and look at your investment thesis. Don't look at how much you lost. That money is lost anyway. Now it is important to understand that you have to ask yourself one single question. You look at one company and you say, is this company in the next 12, 18, 12, 24 months will do better than a potential replacement? So if you're holding on a stock because you lost 50% of your money on it and you think that it may rebound at one point because the economy is going to be better and so on, well, you're thinking the wrong thing here. You need to have businesses in your portfolio that will thrive after the economy, not just do a little bit better or recover a part of the money that was lost. Get rid of those bad stocks now. Put the rest of your money into better companies, stronger companies. Use the dividend triangle to help you out. So revenue growth, earning growth, dividend growth over the past 5 years. Look at trends. Those are the companies that you need in your portfolio, not those that are doing bad right now and will do okay later on. Now that you have done that, in terms of finding a potential replacement for your portfolio, go for safety. At this time, we don't know if we're going to end up with scenario number 1 or scenario number 2, so you don't want to take too much risk. You don't want to chase falling knives. You don't want to go for high yielding stocks. You don't want to go for that, oh, I think this one will do better later on the road because I'm very optimistic. Go for safer stocks. Look at cash, look at debt ratio, look at debt to equity ratio, quick ratio, stuff like that. You want to make sure that those businesses can weather the storm. They will not be too affected by the fact that there's an economic lockdown right now. Those are the companies you want in your portfolio now. Finally, don't go overboard. Don't shuffle the entire portfolio you have down the toilet and then buy new stocks. This doesn't make sense. There's a reason why you have built this portfolio in the first place. Chances are 80 to 90% of your portfolio will stay as is. In my own portfolio, I did minor tweaks, a few trades here and there, nothing big. Just want to make sure that all my companies are solid and will thrive going through this recession. But basically, I've changed maybe like 5 to 10% of my portfolio in terms of value. It's not much. It is not the time to change your strategy right away because you suddenly realize that you're not an investor that wants to have 80% in equities. That is a bit too late for that. You're better off making sure that your portfolio is well positioned right now, but don't go overboard. So, hope that you have enjoyed this video. Don't forget to subscribe, the link button right there to have daily notification. Tomorrow I'm coming back with another investment topics, and while the market is going down, don't forget to stay invested. Cheers.